Today's tech news spotlight falls on Marqeta, Inc., which has found itself embroiled in multiple class action lawsuits resulting from a significant stock price tumble. Let's break it down. Investors might want to grab a stress ball here because the rock star of digital payment solutions, Marqeta, had a bit of a meltdown. Two law firms, Robbins LLP and Kirby McInerney LLP, have springboarded into action on behalf of disillusioned shareholders, each announcing separate class action suits against the fintech company. The hubbub centers on Marqeta's alleged failure to give shareholders a heads up about troublesome regulatory challenges that stood to dampen their parade. To give you a timeline that's juicier than a freshly squeezed data chart, here's what transpired. During earnings announcements on November 4th, 2024, Marqeta revised its fourth quarter forecasts, attributing multiple factors including increased scrutiny of the banking ecosystem and customer program modifications as the spanner in their works. Investors were promised net revenue growth would shrink from the anticipated 16 to 18% to a considerably less dazzling 10 to 12%. Gross profits also downsized their glow-up prospects by about 8 to 10 percentage points from initial expectations. Now, you'd think things couldn't get any murkier, but alas, it gets worse. Marqeta's stock price received quite the 1-2 punch. It plummeted 42.5%. That's right, from a solid 5.95 cents per share down to a humbling 3.42. Talk about a stock market soap opera cliffhanger. The backbone of these lawsuits isn't just a revenue guidance cut. It's the juicy claim that Marqeta's higher-ups allegedly knew about this turbulent regulatory terrain much sooner and decided to keep it mum. Shareholders aren't thrilled with what they see as driving blindfolded with no GPS through some treacherous financial terrains. Both the flame-throwing law firms advocate for investors to keep their ears perked for opportunities to recoup losses or serve as lead plaintiffs to pilot these courtroom showdowns. For those fretting on who has their backs, Robbins LLP delivers a track record of wrestling for shareholder me-jorv initiatives, wise-up practices, and reel-in C-suite disciplining if they are astray. Meanwhile, Kirby McInerney LLP doesn't twiddle its thumbs either. They've been exploding on the legal scene with staggering recoveries in securities litigations over the years. If you're a stakeholder who feels like Marqeta might have thrown some shade, or at least some shadow, on your financial sun, pay attention. These lawsuits emphasize vigilance and transparency in investor relations, particularly when those regulatory goblins creep out of their hiding spots. And remember, Banksy might have the art scene, but Marqeta's got the courtroom drama covered this week. Keep your portfolios diverse, your sights clear, and your favorite business analyst on speed dial. Thanks for watching to the end. Remember, this is just one story from our full daily show, which includes all the other news and an analysis of the day's tech market activity. If you found this video interesting or insightful, then please like, subscribe, and share it with others. Your support is greatly appreciated. Catch you later.